Hi, folks. Welcome back to On Call with Insignia, where we go on call with leaders innovating the future of Southeast Asia's internet and digital economy, or as we like to call it, Asia Innovation. I'm your host, Paulo Joquino. And we have a very special episode because we're not going on call with our guest today. We're actually live with him here at their office in downtown Singapore. We have with us the head of innovation banking at HSBC for Asia, Jonathan Yip. Thank you very much for joining us.
Thank you.
This conversation.
Look forward to this conversation.
Yeah, I think there's definitely a lot of topics we're gonna cover here, and really relevant for a lot of startups, founders that are listening in, and even investors who are backing a lot of these founders, especially in this climate. But first of all, I think we start with the basics, right? What is innovation banking? What does it mean for HSBC and for yourself, who's worked at HSBC for a couple of years now? Like, how have you seen what role does innovation banking play in this evolution of how it delivers services to clients?
Well, thank you. I think firstly, you have to really take a step back and recognize that the stakeholders that participate in the innovation economy are fundamentally unique. Those that invest for the future, those that build for the future, they think differently, they behave differently, they have a very unique perspective of how the world should be organized, and they're putting real dollars into building the world that they believe will transpire over the next 5 to 10 years. And for many founders, they're also very unique characters as well. Many of them very technically sound, very smart, have a sense of purpose in life, graduated from amazing schools, and are really on a journey to also shape a world or build a business around what they fundamentally believe in. And so when you take two very unique categories of clients and you put it together, what HSBC is attempting to do is build a global banking proposition that allows us to serve these two categories of customers at scale. That's what innovation banking is about. I think about it as a platform that supports global prosperity. I think about it as a platform that allows both investors and founders to tell their story in terms of how they see the world, what are the opportunities they're working on. And within the bank, we have built a team of bankers that are located in 10 of the world's deepest venture capital markets, all with a focus to support venture capital firms and their banking needs, the founders and their banking needs, and make banking as frictionless as possible so they can focus on what they do best, which is find the next biggest opportunity or devote the majority of their time building the product or the proposition that they fundamentally really believe in. Each of our markets are split into 4 different teams. We have a team that covers the startups themselves. We have a team that banks the funds, so the VC funds. We have a team that underwrites credit specifically for the investors and the funds and the startups. And we have a team that covers the GPs and does business development across the ecosystem. So when you put that together, it's really a community of bankers that's here to support innovators and investors.
And it's a very holistic approach considering the different stakeholders in the innovation ecosystems that you guys serve, and have the pleasure of working with one of those teams pretty closely, and that's what allowed this kind of conversation to come together. So really grateful for that, for this opportunity. And so for the rest of the conversation, given what we know, the context of creating this community of bankers, as you mentioned, I wanted to discuss a couple of top of mind things that startups, investors, especially finance teams in these companies have these days. I think number one is definitely liquidity. I think even when we talk to our own portfolio CFOs, that's one of their number one top of mind things that they think about on a day-to-day basis, especially for multi-market organizations. You want to make sure that all your eggs are not in one basket. You want to make sure that it's working efficiently for your company, even if it's quote unquote idle. What has your experience been so far working with CFOs at some of these startups, or even CFOs at these venture capital firms, in terms of helping them achieve their liquidity needs?
Yeah, first I would say that the venture capital market over the last couple of years has just gotten larger, and so the money is there. And I don't have the exact figures with me, but if you take a look at 2024, I think roughly about $300 to $350 billion of capital has been deployed into venture capital through the year. 2025, I think that's gone to 425, and 2026 is probably going to smash the records as well. And a lot of that is being concentrated into AI in very specific sectors. Funding-wise, I think the market is functioning. It's just that it's becoming more selective around where it goes, which markets, which opportunities. When it comes to working with the CFOs of venture capital firms, our focus is really about how do you open accounts quickly for them? How do you give them the visibility of where their cash is? We want to go extremely deep with them in terms of the banking infrastructure as it ties into their funds operation. You think about Fund 1, Fund 2, Fund
Right.
3, think about the SPV accounts, the management accounts, and really wrap a holistic banking solution around their needs. As it relates to startups themselves, different startups are at different stages of their journey, I would say. Earlier stage people or the companies that we work with are a lot more focused on building the product themselves. Their treasury needs are a little bit simpler. But as they continue to scale and as they go into overseas and different markets, we see a lot more international requirements start to emerge. And today's companies are actually a lot more global from a much earlier stage than the prior generation of innovation, I would say.
And AI has a lot to do with it, I would suspect. But you're not necessarily, with the product that you're delivering, you're not necessarily tied to a single market. You're obviously wanting to expand and scale as rapidly as possible for a lot of these companies. And on the venture capital front, I think really interesting that you have this kind of value proposition that already takes into account more long-term thinking for funds, for venture capital firms, especially not just the first fund, but future funds and other kinds of vehicles for other asset classes.
Yeah, the focus is make it as frictionless as possible.
Right.
They need to not think about banking and just have that trusted partner that understands how they operate, what they're investing in, and the sector that they're participating in, some of the opportunities they're solving for, challenges, and really just speak the exact same language as what this community is used to.
And I just had a quick follow-up to that is, like, personally leading this innovation banking in Asia, was there like a learning curve for you in terms of trying to figure out what VC firms, for example, need or what startups need over the last few years?
I've been working on this agenda for almost 2 years now. I think Asia is one of the most incredible regions in the world, growing extremely quick. It's extremely diverse. Each sub-region within Asia has, I would say, different form of innovation that is occurring. If you think about where I'm based in Hong Kong and China representing one market. A lot of it is centered around advanced manufacturing and AI. Singapore is really around digitization, embedding AI into the ASEAN market and finding out how Singapore can support the markets that operate around it through new forms of capital, talent, and really new ways to monetize business opportunities that otherwise wouldn't exist in a brick and mortar sort of world. India is just a very structurally positive market for both investors and builders. And what India has done over the last 10 years has been pretty incredible in allowing businesses to fully digitize and build in ways that brick and mortar was not able to. And so I think the learning curve is twofold. One is really appreciating the diversity that Asia represents, but equally also bringing cultures together. The teams in India and the teams in Southeast Asia, teams in Hong Kong and China, they're very different. And as you're trying to build a platform that is global in nature, you want everyone operating with the same rhythm, speaking the same language, culturally understanding what we're trying to do and how we're supporting the community. That's been an incredible journey over the last sort of 2 years.
I was curious to know as well, from a startup standpoint, I think especially these days we see a lot more startups be more open-minded when it comes to the type of funding that they typically look out for and receive, not necessarily limiting it to just equity, especially if the business model demands, let's say they're in lending or whatnot. What are the kind of insights you've seen so far in terms of the demand for credit in particular, debt for startups?
I think the demand on credit is certainly broadening, and I think what's different in this cycle of innovation versus the last cycle of innovation is how these business models come together. Like in the era of AI, it's different to, I'll call that a generation ago, where you start a business, you get some venture capital funding, you create a platform, and then you scale it across one home market. And as you do well, you expand into different countries. When I look at how the whole ecosystem's coming together, whether you're building applications or you're building foundational models or you're building the hardware and the chips that power some of these models, or it's data centers or it's energy, each innovator or each investor that's working on that opportunity, if you will, requires a different form of capital. Some of it requires more patient capital, some of it requires more venture capital, some of it is about private credit, some of it is about venture debt. So it's gotten a lot more complex, I would say. And for people operating and building in this space, it's really important to find the right partners with the right risk appetite and those that certainly share the same vision around the opportunity that you see.
Yeah, you went through what I guess we often call like the Jensen Huang coined this term,
Yeah.
kind of the 5-layer AI cake.
Yeah, they call it 5-layer cake, but it is a great way to frame it.
Right,
Just
right,
very
right.
structurally, this is how it's coming together.
Yeah.
And there's different forms of capital for each stack, I would say.
Related to that, how do you see AI really impacting the way that finance team CFOs or just the startups or these VCs in general think about the way that they, for example, work with banks or do their financial management or treasury or things like that?
I think AI is such a big game changer for CFOs, funds. The tools that it enables shows up in a couple of ways. One is around sort of productivity, and that's a given, the speed at which you're able to analyze documents or the speed at which you're able to do due diligence. But the more sophisticated players, I would say, it really gives you tools that for a lot of smaller funds or smaller startup companies or mid-market companies generally, you would never be able to get. Like it would take you years and years of growth and, I guess, institutional team building to get some of these capabilities. So you almost have, it's a great level setter, actually, to bring startup organizations to operate at the same level of professionalism as maybe a large cap, for example. Two areas for CFOs, I would say. One is certainly use these tools as a way to automate things, gain visibility, predictive analytics, really shave time off your day. But the other piece to that is how do you transform your organization and accelerate the maturity curve that allows you to operate like a large company at scale. So some of the more sophisticated CFOs that I work with, it's not just about reporting or where's my cash or forecasting, it's actually embedding AI into the sales process, for example, so that you can detect in a very unemotional way, I know you're the top salesperson, but it looks like you could have done a little bit better here, and really going into the operational aspects of the business and driving more financial value for the company.
So it's not really removing the silos, especially between operations and frontline revenue drivers from the finance team, which typically seen like almost like a back office, do the books.
So you have an opportunity to lead from the front,
Yeah.
and it just gives you visibility that you've never had before.
Yeah.
And I still think we're very early in that journey, and not all CFOs are AI native. Many are on that learning curve today.
Yeah, so I guess this whole mission to make things more frictionless goes multiple ways.
Exactly.
It's not just like the services themselves, but also how it's delivered. Maybe working with these startups would eventually pay dividends in terms of being able to integrate like the new technologies or innovations that they may have down the line that could make things even more frictionless for not just startups but other organizations. I also wanted to talk about, I guess, the term of multipolarity and kind of geopolitical uncertainty and all these things are thrown around these days. How has that impacted the sentiment of startups and VCs that you work with in the way that they work with you guys specifically?
Look, maybe I'll again take a step back, and I know it's very easy to take a look at the broad narrative of volatility and geostrategics and geopolitical sort of discussions, but I genuinely fundamentally believe that in the world of AI and supply chain and everything that's happened the last 5 years, 10 years, even past decade, the world is actually becoming closer together. It's genuine, like in terms of company formation, for example, we're seeing companies that are born day one global. You could have a company where they're dual headquartered in the US and Singapore, for example. They might have their tech development team in India or China, for example. And the go-to-market might be very different too. The go-to-market could be Japan, or it could be Switzerland, or it could be in Australia, for example. In the midst of a lot of the, I would say, fear or noise around geopolitics, I genuinely think that underground or beneath that is a community that is still functioning cohesively. I always think that innovation is very pragmatic. A financial dollar is very pragmatic. A smart dollar will find a smart investor. A smart investor will find a smart builder. And a smart idea will go across borders.
It's really important to have that fundamental kind of conviction about the future. I think otherwise, what's innovation for really? And really thinking long term, and I guess a pragmatic and at the same time very optimistic kind of future. And that obviously means you have to work with different people and all of these things. I wanted to wrap up our conversation going back to the people that you work closest with, the CFOs. And I guess from the experience you've had working not just with CFOs at startups or VCs, but just various clients over the years, what are some of the things that you've learned from these partners that you've had over the years in terms of what it takes to really build a sustainable company, an enduring company?
There's one thing I think about every day as we're building innovation banking, and we'll call it the 3 C's. It's customers, connections, and capital. And as we're building this platform, I'm trying to find a way to optimize for all three. Innovation banking, we have a platform that allows us to connect startups with new customers. So we bank a number of mid-cap to large-cap companies, and how we solve for that through ecosystem events or introductions, for example, is one thing that we're working on. Connections, we work very closely with our investment bank, we work very closely with our private bank, really just to open the door of new conversations, new networks that allow founders to get fresh ideas, to meet new people. We do a lot of ecosystem events too, bring in regulators and science parks as well, so curate a community that finds a reason to connect. And then there's capital as well. And capital can come from various forms, the public markets, private markets, even banks. We do lending and venture debt for our clients. And I think that's the way that CFOs should really think about their organization too, really. The core mission of what your company is about, who are their customers that you're serving, what is the purpose and what is the value that you're providing to society. Always think about connections in this world of innovation that we're seeing today. No one has the right answer to it. You need different forms of capital, you need different partners, and continue reaching out to people that play critical roles inside the innovation sort of ecosystem, whether it's lawyers or bankers or accountants. And always think about capital, right?
Yeah.
Think about where your money is. Think about how you optimize for cross-border risks, for example. Think about the capital stack, the right mix of equity and debt. And if you are to take on debt, the number one rule to debt is always just make sure you can repay it, because otherwise it gets extremely painful. But that would be my general advice, for CFOs. Really, instead of just focusing on the financial side of things or reporting side of things, really think much more broader across the 3 C's and try to create value through that.
Yeah, and I think thematically throughout our conversation, I think the message is really that there's a lot more that CFOs can be doing in terms of like driving their organization forward, working with their CEOs or C-levels to really build a great company, one that serves as many people as possible and creates a positive impact for their markets. So,
you start out with the numbers, and the numbers don't lie, and they'll tell you the health of how the organizations do. And that is phenomenal sort of visibility over the core architecture of the firm and how it's doing, right? And then you layer on tools and capabilities that AI can bring, and suddenly now you can bring on more operational value to the organization, both in terms of driving sales, new ways of doing things, new ways of architecting things. I think that's probably where the future CFO should move towards.
On that note, and speaking of community, this recording precedes an event that we'll be doing with HSBC Innovation Banking, specifically on the topic of helping CFOs really unlock what they can do for their organizations, whether it's through working with HR, leveraging AI and all these different tools. So really excited for that. But even before the event, thank you for joining me in this conversation, and thanks for all the insights and sharings that you
appreciate it. Thank you. I really enjoyed it.